So banks can no longer make it. They are struggling and customers are going to feel the effects. I was talking to a friend of mine just the other day and he had some very interesting insights from his bank and what they are doing. What they have just done this past week is scary. I'm going to explain what's going on and show you what is actually happening around the United States and why this could be coming to affect you very soon. So make sure you stick around and watch this entire video, and I'll explain exactly what is going on. But all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So what is happening around the United States is causing banks to panic because the consumer doesn't have any money to pay back their loans. This includes mortgages, credit cards, auto loans, even student loans. Everybody's feeling the effects. Just look at this. It says Bidenomics. Americans falling behind on auto payments at record rate. Mass repossessions looming. Now, what's interesting about this is, and I look at what's happening, what's currently going on versus what has happened in the past. What we are now seeing is something that is a pretty similar reflection of what went on back in 2008. But here's what's going on. People can't pay their loans. The banks are hurting as a result. Listen to this. This is the comment that I received, or not a comment, a text message that I received from one of my friends. He says, bro, you won't believe what we did last week. We had to let go of 8 out of our 10 representatives we had, and we hired 8 debt collectors. Last month I told you that we would see a major change at the bank, but I didn't realize it would be this significant. Now our texts went back and forth. I'm not going to tell you exactly what we discussed, but again, this is a regional bank. He is a branch manager for a regional bank. They had to just let go of 8 out of their 10 representatives. In return, they hired 8 debt collectors. So now, essentially what they're doing is, instead of giving more loans, they hired debt collectors to go and collect the debt that they currently have. So this means if you have a car, have to make your payment, a debt collector could potentially be at your doorstep to either get your keys or they'll be there with a tow truck to tow it away. They're done. They cannot stand up for this anymore. They have to go and take action immediately before the next step. I was talking to somebody a few days ago, and they were telling me what they were concerned with. Their concern was that because they were behind on credit cards, they were behind on their 2 car payments, they were renters, they don't have a mortgage. Okay? Well, they were concerned that the bank, because they heard stories, that the bank could potentially use the money that they have in their account and pay off their auto loan, pay off their credit cards. Well, here's what can and can't happen. Can they use the money in your account to make you current on an auto loan? Yes, they can do that. Legally, they cannot take any money to make you current or pay off a credit card. Those are 2 different things. Auto loan, credit card. An auto loan, yes, they cannot take all your money and pay off an auto loan. But can they make you current if those accounts are connected? Yes. Well, here's what happened. I told that person the exact same thing. That don't worry, they cannot legally take the money to pay off your credit card. They can't even take the money to make a payment on your credit card. Okay, it's a different type of debt. But can they take money out of your checking account and use that to make sure that you are current with your auto loan? Yes. That is actually what happened. Just the other day, a day or 2 after we talked, that's exactly what happened. The bank took, I think it was like a little bit under $2,000. Okay, it was like 2.5 payments or whatever it was. That was what they took out of the account to make their balance current. Here's the problem. That was all the money that they had. Okay, that was all the money that they had in their bank. But this is what banks are going to do. They have to do this because they have to stay solvent. They cannot go bankrupt. Okay, again, this is a problem. Now, I want to show you this. Credit card debt is soaring, especially in these cities. Okay, well, what cities are these? Well, I'm going to discuss that. But the reason why I'm bringing this to your attention right now is because we continue to see people spend on credit cards. So I have a friend. He decided to buy a car that he can't afford. And so he bought this car he can't afford. And on top of that, he didn't realize that his insurance was going to go up. I think it was almost triple. Okay, he's only 24 years old, and so he's a little bit of a high risk for the insurance company. Well, he bought this car. I think it's like $900 some that he spends. So let's just call it $1,000 that he's spending. Before, he had an older vehicle, was spending a little bit over $100 a month. Now he's spending a little bit over $300 a month. So he went from no payment from an older car to a $1,000 payment plus an additional $200 in insurance. So his difference is about $1,200 every single month. He's already regretting the decision that he made to buy this vehicle, but because he thought it was a good deal. But here's what you need to understand. The banks, in again, some cases, they will give you a high interest rate just to get you into a car, just to get you in as a customer and with a credit card, right? They'll get you in some way because that is how they make money. But here's the thing. Don't put all these additional expenses on your credit card. Don't go into deeper debt because people say now is a good time to buy. No. Prices are going down, yes. Doesn't mean you should buy. It just means that these businesses are struggling and they have to get rid of and unload all these things that they have, all their inventory. Just look at this. These are the cities, okay, with the highest debt. Look at this. It says the city, ranked number 1 is Santa Clarita, California. Household credit card debt is at $21,836. Total credit card debt is $1.6 billion. Yeah. Chula Vista, $20,000. New York, $19,000. Fontana, California, $18,843. Rancho Cucamonga, California, $18,000. It's odd that 4 out of the top 5 are in California, and the other one is New York City. Then we got Hawaii and California. Finally, we're in Virginia, then Florida, back to California, Arizona, California, and then Texas. Okay? The thing you need to understand is that the 2 states that are very expensive to live in, New York, California, okay? Both of which you have to pay taxes. You have to pay state taxes. Now, I'm not going to get into that today, but I want to leave you with this one last thing. Banks are struggling at this time, and as a result, they're coming after you. They're going to do whatever they can to take your money. They're going to come after your car. I look at Copart.com quite a bit to look for different cars I could potentially purchase that have been repossessed or have been damaged in some way but aren't totaled, where I could potentially fix them and sell them for a profit. Now here's the thing. The amount of cars that are on Copart.com it just keeps increasing. And this is just one auction site. There's so many other sites as well. But again, keep that in mind. As we see all these auction sites, so their inventory just gets bigger and bigger. It's not a good thing. That's bad because it's a sign that the economy is struggling. All right? So I will leave you with that, but understand that banks are coming after your money because they absolutely need it. So I want to thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.